Altice USA, one of the largest cable and internet providers in the United States. It has brands like Optimum and Lightspeed. Company continues to push its streaming, TV, internet device, Altice One, and the expansion, of course, of 5G, very important. It forecast strong growth last week. But the stock, well, it has struggled since the company went public. It's down around 20% so far in 2018. Of course, it went public right here, June of 17. Joining us now for a CNBC exclusive is Altice USA CEO Dexter Goei. It's been a while.
Good morning, Dave.
Nice to have you.
Nice, thank you.
I talked about the company, of course, going public. You know, it's funny. I was a skeptic early on when you and Patrick Drahi bought Cablevision, bought Suddenlink, and argued that you could take the EBITDA margins up substantially. But you've done that.
Yep.
The last quarter, your adjusted EBITDA margin was 42.5% compared to 42.7% from the year ago, and it keeps moving in the right direction. But the stock doesn't. I mean, why the difference? You did what you said you would do despite many skeptics, and yet stock's down 45% this year.
Well, listen, I think it's a whole host of factors, mostly things that we don't control, which is technical factors relating to the split of our company from Altice Europe. You know, we spent the first 6 months of this year part of Altice NV, a very disjointed story versus our European story and our US story. Very difficult to see clarity on the Altice USA earnings and profitability and momentum. And we've only been separated for the better part of the last 6 to 8 weeks. So we're getting back into momentum. They're focused on the story itself here in the US. We continue to feel very good about our numbers, very good about momentum. Free cash flow numbers were good, up 73% in the last quarter. And so, you know, if we're focused on, at the minimum, returning money to our shareholders through share buybacks at a minimum. But if anything, we think that the stock will take care of itself.
Right, and it may over time. And of course, as you point out, you are now a pure play, which really it was a somewhat confusing situation not that long ago. But the concerns still are, well, people think cable, they think video, they think cord cutting. We just had Anthony Wood on from Roku, of course. Things seem to be moderating a bit, but what are you seeing on the ground in terms of video subs, and what do you expect?
Well, we've seen the last 3 quarters where we've gotten better video subscriber numbers and trends relative to the former years. We don't look at it in any specific way other than say that we continue to execute well. We do have a very particular market for Altice USA, which is the Optimum market, is a high penetration of video, cable video. It is 9 live professional sports teams, 3 RSNs, multicultural, high demographics in terms of wealth demographics. So cable and Fios do extremely well in the video bundle. Our sell-in rates continue to be 60% plus on video. So we're not seeing any large change in our video trends. And on the Suddenlink side, where we had under-penetration of video, we think it's opportunity, where satellite is starting to falter relative to other alternatives.
Well, satellite's been given up a lot of subs between Dish and DirecTV, or AT&T.
Right, and that is our number one competitor in that market. And so we've got an opportunity with the Altice One box, with better content. As you know, we've put Viacom back on. And so that all has boded well for our Suddenlink numbers over the last 3 quarters.
It's funny, I want to ask you about your business, but there are so many others you're connected to I also want to get to. I mean, you mentioned sports teams and RSNs. Yeah. There's going to be a huge sale of RSNs coming from Disney's divestiture when it completes the Fox deal. Do you have any interest in some of those properties?
Not at all. That's not really our focus today. We think that content companies, arguably with our size, should be run separately than us. There are some synergies between distribution and content, but we don't think that that's a good use of our capital.
So you're not going to play at all in that. And you mentioned, of course, Viacom going back on Suddenlink. We got Viacom earnings this morning. Yep. They're talking turnaround. What are you seeing in terms of viewing? Are you happy with that deal, and are you sort of seeing what they seem to be saying they're seeing?
Yeah, I mean, listen, I think that ultimately we can't pinpoint as to why our video RGUs are doing better than expected. But viewing minutes are up about 10% year over year. And our sell-in rates on bundles and video RGUs are up 10% year over year. So some of it has to do with content, some of it has to do with some of the operational decisions we've made. And that's all ahead of a strong launch on the Altice One product in the Suddenlink footprint. So we're cautiously optimistic as to our video trends.
Overall. And what about when it comes to the Viacom properties?
I think the Viacom properties, I think Bob and his team are doing a good job on the turnaround. very focused on their brands. I'm not close enough to what they're doing, but we like what they're doing. It seems like our customers like what they're doing, so we know we're rooting for them.
People may not realize so much of their video that they spend on it is for the retransmission of local stations,
yes,
whether it be or national broadcasters such as CBS or ABC, but Sinclair and Tribune as well. Any thoughts on the failure of this deal and what it may mean?
Well, we're not close enough to the details. We just can read what's out there. But fundamentally, we're not a big fan of some of the independent retrans operators getting a lot larger because retrans is the single largest cost item in our P&L that's going up, high double digits in many respects, depending on what the operator is. So arguably, it's a good thing that the deal.
Would Sinclair have been trying to get even higher rates for retrans if they had Tribune?
We have a good relationship with them. We go through regular tussles around contract renegotiation. So yeah, I'm certain that they would have wanted to push for higher rates going forward with Tribune as well. But we'll see if that story ever comes back.
Stuff we all used to get for free,
absolutely,
by the way.
Absolutely.
When we had antennas. Back to Altice itself. You mentioned buybacks. You've got a leverage ratio that's come down from, I think, was 7.5 times when you finished the Suddenlink and Cablevision deals, closer to around
5.3, yeah, exactly.
What kind of buybacks can you conceivably do, though?
Well, we've got a $2 billion authorized program. If you look at kind of what the market thinks our numbers are developing over the next couple of years, arguably, we're getting close to 4 times leverage by the end of 2019. So if you want to stay at 5 times and you've got EBITDA numbers that are out in the market, you're probably doing something around potentially $4 billion-ish of $3 to $4 billion-ish of buybacks over the next 15, 18 months.
Given your market cap, that's a significant percentage.
It's a big number. So that's at today's price levels, but fundamentally, we think we can return a massive amount of capital to our shareholders.
Now, given the difficulty the stock has had over the last year, we haven't talked at all about consolidation, even though there was a period when you and Patrick Drahi were viewed as consolidators. Charter, even, I reported on it, your interest in that at one point, at least when SoftBank seemed to be also interested. Do you think that there will come a day again where you can talk or think about doing another big deal?
Well, listen, we're very focused on our operations today, post the spin-off from our parent company. But, we're deleveraging so quickly. We continue to have great growth initiatives. We've doubled the top line growth since we've taken over the business from what we inherited. And we think we've got real momentum with Altice One, with fiber to the home, with the mobile launch in the beginning of next year. So we're going to be there should somebody be interested in talking to us at some point, I think. But today it's all about operation and delivering on our projects.
Is that going to be enough, though? I mean, so much of the thesis that surrounded you was continuing to do deals. That was sort of the Altice way for a while, taking these companies and then get those EBITDA margins up.
Well, consolidation by and large over the next, I don't know what the time frame is, medium term, is inevitable. Size does matter in these businesses. And so we'll see what happens. We'll either, do something, team up with someone. I can't even think about all the different possibilities.
All right.